But is he looking or he's looking? Yeah. Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Tablespace founder and CEO Amit Banerjis passes away at 44. The news comes at a time when the company was planning to hit the IPO market in 2025.
Union Minister Ashwini Vaishnav defends the proposed law requiring parental consent for those below the age of 18 to access social media and e-commerce platforms. Industry will get 2 years to comply with the new rules. Minister adds India does not need data protection laws similar to Europe, which he says is stifling competition.
The Supreme Court has directed the Karnataka High Court to hear all competition-related cases against Amazon and Flipkart. The Competition Commission of India had sought to move all the cases pending in multiple high courts to the Supreme Court. It contended that parallel proceedings in courts could lead to conflicting orders. However, this move was opposed by Amazon and Flipkart. The Karnataka High Court will hear the cases from January 15th.
Facebook's parent company Meta has moved the NCLAT challenging a CCI order that imposed a 213 crore rupee penalty in relation to WhatsApp's 2021 privacy policy update. The NCLAT will now hear the case on the 16th of January. The competition regulator has alleged that Meta abused its dominant market position with the implementation of the privacy policy. Meta and WhatsApp were also asked to implement specific remedies within a defined timeline.
EaseMyTrip co-founder Nishant Pitti says neither he nor his family will sell any more stake in the company this year. Pitti sold a 1.4% stake in the company to meet personal strategic requirements last Thursday. Pitti had also resigned as CEO of EaseMyTrip last week, and the post was filled by his brother Rikant Pitti, who served as CFO. Well, those were the headlines we've been tracking for you this evening on What's Brewing. Global venture capital firm Accel today announced that it has raised a $650 million early-stage fund dedicated to supporting bold founders in India and Southeast Asia. 16 years after opening its India office, Axel's latest fund, its eighth in India and Southeast Asia, will partner with early-stage founders to build disruptive, category-defining businesses that create meaningful impact. To elaborate more on this, joining me now is Bharat Shankar Subramanian, partner at Accel. Bharat, welcome to Startup Street. Now, like I mentioned, Axel's latest fund plans to fuel the next generation of category-defining startups. How many startups are you looking to invest in with this fund, and in what sectors? Also, what will be the ticket size of the investments you make?
Thanks, Shruti. Thanks for having me. We are very excited about this fund. This is our 16th year in India. We've been primarily early stage investors. Our core philosophy has been to partner with companies, bold founders working on really visionary, disruptive ideas from a very, very early stage. And we'll continue to do that with this fund. This is our eighth fund for India. And our thesis areas essentially span across four broad categories: consumer, AI, fintech, and manufacturing. So these are the four broad themes that we're excited about. And we have multiple different ways of partnering with companies, from our early stage fund, from our Atoms program. And we are super excited about the next decade and beyond for India.
All right. The ticket of investments, can you tell us how much that would be?
So we start very early. So with Atoms, it's anywhere from about $250,000 to $1 million.
Okay.
And from our early stage fund, we can invest up to 8, 10, 12 million per company.
All right. Like you mentioned, Bharat, Accel will continue to partner with founders in AI, consumer brands, fintech, and manufacturing. But I believe you have also identified subcategories of focus within each of these themes. If you could elaborate on that.
Yeah. So for AI, essentially, the way we are looking at the market, India is the #2 talent market globally. We have 15 million plus developers, so there's a lot of talent, to build in the AI space. Within AI, we are specifically looking at enterprise AI. These are platforms that enable enterprise AI use cases using agentic technologies, LLMs, SLMs, services as software. AI startups essentially taking advantage of India's large IT services capabilities to provide better automation. And then vertical AI, this is essentially what vertical SaaS was before, but these are startups essentially taking advantage of India's large AI talent pool to integrate AI into vertical specific use cases. So that's on AI and some of the areas that we are looking at within AI. On consumer, there's a very large internet user base in India, over 900 million plus, over 350 million transacting users, and about 40 million plus affluent households. So within the consumer segment, we're essentially looking at 3 broad categories. Bharat, which is essentially the 100 million households in tier 2 plus India that are becoming more and more addressable thanks to the digital rails that have been built over the last decade.
Okay.
Then India native models. So these are essentially Indian consumers who are expecting higher levels of service, leading to uniquely Indian business opportunities and aspirational brands.
Okay.
So that's within consumer. Yeah.
All right. Bharat, let's now talk about some trends that we are seeing. While India's public markets have grown 3x over the last 10 years, VC-backed companies represent less than 5% of the market capitalization. Now, with over a dozen companies listing last year and more than 2 dozen startup IPOs lined up for 2025, what is your view on this?
Yeah, I mean, it's been a great evolution, right? So a decade back, a lot of the questions that we used to get was, do public markets really look at startups? How will they value them, reward them? That has really changed. So we have a healthy stream of companies that are now prepping to go public. I think, what has flipped in the last 4 or 5 years is, founders now coming in and, telling us that, hey, we are now actively and seriously considering going public. Let's work towards this, right? So better unit economics, more sustainable models, and then access to public markets funds to build something that's more long-term and enduring. I think these are the changes that have happened in the last few years, and we are very, very excited about that.
All right, one final question before I let you go, if you could quickly answer that. Accel's early stage scaling program, Accel Atoms, that you also spoke about earlier, now in its 4th iteration, has supported 36 startups to date that have collectively raised over $200 million. In the past 2 years alone, Accel invested in over 27 AI startups in India or by Indian origin founders. What does 2025 look like for Accel?
Yeah, for Atoms, essentially, we are running 2 cohorts now, AI and Bharat. So these are 2 streams where we're actively looking for companies, founders to work with. And we will continue to sort of look at new thematic areas. And the way we do it is essentially a prepared mind approach where we work on thesis areas that we think will be material and relevant for India over the next decade, and essentially come in early. And Atoms gives us a way to do that in a fairly swift manner.
All right. On that note, it's time for me to wrap up our conversation. Bharat, many thanks for joining us today on Startup Street. Wish you the very best for all your growth plans.
Thank you so much.
Moving on, it's only been 8 months since Chennai-based SaaS major Freshworks got a new CEO. And his first interview with CNBC-TV18, Dennis Woodside, also made his first big prediction for the new year. He says SaaS pricing models will change in 2025. Jude Sanith caught up with the new Freshworks boss on the sidelines of the Chennai Marathon to talk to him about pricing, AI adoption, layoffs, and his passion for running. Here's a slice of that conversation.
We've been the sponsor for the Chennai Marathon, including the 10K. I think this is our 3rd time. And it's really exciting for us to get out here, to be able to support Chennai. There's 25,000 people who are running today, which is amazing. We have about 300 of our own employees running, so I really had to be here.
Talk to me a little bit about the decision that you took. How difficult was it as a new CEO who's just come into the company to lay off 660 employees at the get-go? How challenging was that for you?
Yeah, well, so I took the CEO role in May of last year, and one of the things that we needed to do is make sure we've got the right people, the right team to take the company forward. It's obviously a tough decision. I'm really excited about where we're going. We've got an amazing position in our EX product line, which serves the IT department. We've got a great position in customer support as well, and our AI products are doing really well. So we've got a really bright future, really excited.
What exactly lies ahead that you're really looking forward to in 2025?
So I believe that we can become one of the defining software companies in our space and a true global player. We have customers all over around the world. Over 70,000 companies use Freshworks to run their company, and that's everywhere in the world. The very first business that ever was a customer of Freshworks actually was from Australia. So we've been global from day one. That opportunity is huge. Every company in the world has to automate their service operations. They have to use AI. They have to automate their IT department. That's what we do. So our market is every company in the world. That's a huge opportunity for us.
But I'm just wondering, Dennis, what's the big challenge for you as a CEO here?
I think a lot of what we're trying to do at Freshworks is to provide a lot more value for our customers and solve bigger and bigger problems for them. So those customers tend to be much larger, and that requires us to grow up as a company to be able to serve more complex needs. So that's the real challenge for us. How do we serve those bigger and bigger companies that are looking to us to solve their problems?
What are those big challenges that you hope to get around?
Well, every company that we work with is talking about AI and is trying to figure out how do they use artificial intelligence to improve their interactions with their customers, to make their employees more productive. So we've done a great job of building AI products that the market is finding useful. We reported this in our last quarter in Q3. We had over 1,700 customers for our Freddy Copilot product, which makes agents more effective. So our job is to make every one of our companies, we have 70,000 customers, not all of them are using AI, not all of them are comfortable with AI. That's what the opportunity is for us, that's what the challenge is for us.
Is there a timeline that you have for yourself in terms of when everybody will end up using AI?
I think in 2 or 3 years, the vast majority of our customers will be using AI.
All right. In fact, Sridhar Vembu of Zoho said there's just way too much SaaS going on, and that AI might lead to further productization on a scale and level that we haven't quite seen before. Do you foresee that being a problem that stares at you in the face at this time and place?
I think it's a real opportunity. So the traditional software as a service model is a seat license model. You pay a per agent price for the software. But with AI coming in, that's going to change. You're going to pay more on interactions, you're going to pay more on resolutions. And we're currently using a model for some of our products that's based on interaction. We're exploring resolution pricing as well. You're seeing some companies do that. So I think the pricing model will evolve and change, but the value to the end customer is going to be substantial, and that will enable us to build a big business.
All right, so while you see pricing models change, what's the one big trend that you look forward to in 2025 for the overall SaaS industry, AI included?
I think 2024, AI for most companies was very new, and in software, we launched our first Copilot product into GA, general availability, just in February. So it hasn't been that long that we've been selling AI. In 2025, it's going to become much more mainstream. A lot of our customers are going to move into our AI products, and it's just going to be a way of doing business.
What kind of growth projections do you foresee or project as far as the SaaS industry is concerned in 2025?
Well, the industry has to provide value to customers, and that value can be improving the productivity of their workers. That value can be improving the customer satisfaction of their customers. So as long as we're doing that, there's going to be a lot of growth ahead of us. And the business is, as you said, quite large, already growing quite quickly.
All right, and would you hazard a projection in terms of how much the SaaS market will grow this year?
I haven't seen any projections. I know where we're going. I'm excited about our future. I think there's a lot of growth ahead for everybody in the market.
All right, and what's your one big prediction for 2025 overall that you could see change the game really in terms of SaaS?
What we're working on is what we call agentic AI. So AI that can take actions on behalf of the customer. Think about if you need a return of a product that you want to ship back to the company that sold it to you. AI can handle all that. And so we're excited about agentic AI, enabling AI to do things on behalf of companies.
Well, and what's brewing today after the Delhi NCR region, Bengaluru and the UAE, electric ride-hailing company BluSmart has announced its expansion into Mumbai. The rollout will initially allow select participants to access the service before it becomes available to the general public. Now, founded in 2019, BluSmart now operates a fleet of more than 8,500 electric vehicles and has a charging network of 5,800 stations. For more on BluSmart's Mumbai launch and its significance for the company, joining me now is Anirudh Arun, who is the co-founder and CEO of BluSmart Fleet. Anirudh, thanks very much for your time here on CNBC-TV18. BluSmart finally entering what is a fairly challenging and competitive market in Mumbai, dense traffic, high demand. Start by telling us your plans for the market, the timing of this launch, and what your overall expectations are.
No, thanks so much, and a happy new year to everyone. We are super excited to launch in the Mumbai market. As you know, it's one of the classic Trinity markets of the country. BluSmart is already present in Delhi NCR, which is Delhi, Gurgaon, Noida, Faridabad, and the surrounding areas, and also in Bangalore, where we service both the city as well as the airport. And we're expanding fast in Bangalore as well. Mumbai was the missing link, and we're very happy to venture into Mumbai on the 1st of Jan 2025 with an invite-only launch.
So what can customers in Mumbai expect then? Because BluSmart claims zero cancellations, on-time arrival, transparent pricing, although your rush hour pricing was seen as surge pricing by some customers. How are you going to ensure all of these features are maintained in Mumbai's tough market?
We communicate beforehand, even during the rush hour pricing. I think we've always been very forthcoming and explained the logic behind what we do. And it's not the kind of thing that always leaves you jittery that, oh, what is the price of my trip going to be today? And that's the same logic with which we have launched Mumbai. There is absolutely no change.
Well, you have about 8,500 EVs in your fleet. How many more are you looking to add in the city? And will all of these be from the JSW MG Motors partnership itself? And how will you scale this over the near term?
I think the audience in Mumbai, just like in Bangalore and in parts of Delhi NCR, are very discerning. They want a certain level of service. So that's why we have decided to enter with the premium SUV class of MG ZS EV vehicles with premium driver partners. Whenever we enter a market, we go deep in that market. So it's not about launching the largest number of cities, but servicing all the use cases that our customers come to expect of us. So initially we are launching with a limited fleet in a limited geography with only rentals, airports, airport rides, etc., which we believe are going to be the go-to use cases upfront. But soon you will see that we will add, other product categories. We will launch, sedans as well, and we will keep informing you, before we do that. And we're very excited to, continue to grow along with the city's mobility needs.
Okay, Anirudh, let's also talk about the charging infrastructure that you're looking to set up for the Mumbai market. What are the plans on that front?
So the charging infrastructure upfront, BluSmart has partnered with multiple public charging network companies, and we have opened up, charging through the BluSmart, driver app, etc. We've exposed our driver partners to the public charging network, which is fairly, well developed in Mumbai. Of course, it's developing as we speak. So we are relying on the early public charging network, while in the background we continue to build our own charging infrastructure in the city as well.
Okay, you'd raised about $24 million equity last year, another $25 million from responsibility. Given that you have this, asset-heavy model where BluSmart owns all the cars in its fleet, is this expansion into Mumbai going to require additional fundraising? Are you in talks with anyone at the moment?
We are committed to, putting in all the funds required to servicing the needs of customers in Mumbai. So as you will see over the coming, 3-4 quarters, we will continue to grow the fleet. We will continue to develop the charging infrastructure and deliver great experiences, 5-star experiences that people have come to expect of BluSmart.
Okay, in terms of additional revenues, what are your
All right, on that note, it's time for us to head into a short break. But once we return, supply chain fintech startup QuiD Cash has raised $4.5 million in its pre-Series A round from a host of angel investors, including Piyush Jain and existing backer MintCap. We speak with Subhash Gupta, the co-founder of QuiD Cash, on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Supply chain fintech startup QuiD Cash has raised $4.5 million in its pre-Series A round from a host of angel investors, including Piyush Jain and existing backer MintCap. Earlier in 2024, QuiD had raised 5 crore rupees in its pre-seed funding round, led by MintCap Enterprises and Stone Park Capital. Joining us now to discuss this further, Subhash Gupta, the co-founder of QuiD Cash. Subhash, thank you so much for taking time out and being here with us on Startup Street. You know, you're a supply chain fintech startup, right? Can you take us through the gap that you're trying to solve for? What's on offer?
Sure. Thank you, CNBC team, for having me here, and wishing you and all the viewers a very, very happy New Year. Right.
Thank you so much. Happy New Year to you as well.
Thank you. See, we are actually working on tier 2 supply chain financing. So supply chain financing itself is a very, very old industry, but we are focusing largely on tier 2 supply chain financing, which is the end MSME is our borrower or a customer. So we provide the credit limits to MSME, who happens to be our borrowers, and who we work with is the large anchors. And these large anchors are B2B marketplaces, B2B e-commerce platform, the modern age large distributors. These are our anchors who have thousands and thousands of MSMEs or retailers to whom they supply the goods and services, and they further sell it to the end retailers. So we are into B2B supply chain, and we cater to tier 2 supply chain financing.
Right, to tier 2 supply chain financing. You've raised this $4.5 million from a host of angel investors, right? So if you could sort of take us through how you plan to use these funds. I know, you're going to use it towards technology and building your platform. So how do you plan to use the funds that you've raised?
Sure. Large portion of our funds is going to be used in technology. We want to make our entire platform much more scalable and flexible. So today, for an example, right from speaking to an MSME to onboard, to assign a credit limit and to disperse an MSME, it takes around 8 hours. We want to bring down that number to less than 5 minutes. The entire B2B credit cycle has to be less than 5 minutes using a lot of technologies and infrastructure, associated infrastructure. We are also going to venture into B2B payments ecosystem. And apart from that, portion of the money is also going to strengthen our NBFC operations, which requires some ground operations and the supports, which requires.
Right. So 3 key areas there that you're using the funds for, and some new ventures that you're looking at as well. But, if you could sort of tell us, you've told us the kind of customers that you serve, but what's the typical size of the loans that you give? What about NPAs? And, how does this work? What about checks in place?
Sure. Our lending check size is anywhere from 50,000 rupees to 1 CR per borrower. At this point, we are at an early stage. We have not seen many NPAs. I mean, our current NPA rate is around 1%. But this year, since we are going a little bit aggressive, we have kept a target of NPA of around 2%.
All right. And so you serve around 8,000 users and partners with over 20 major companies in the FMCG, automotive, pharmaceuticals, and agricultural industries, right? Take us through the kind of partnerships you have, and how do you plan to grow this further?
Sure. So right now, most of the partnerships we have is these with large anchors, and each anchor is having around 50,000 to 2 lakh or 3 lakh MSMEs into their platform. And we want to continue to nurture these partnerships. At this stage, we are operating largely in South India, but we want to also venture into North India and west side of the India. So we are into conversation with more than 100 partners at this point. But we want to be responsible in terms of lending, and we want to serve our current customer base first. So we will grow from here. Right now, we are serving to around 8,000 MSMEs. With the plan we have in next 2 years, we want to make this number to 5 lakh MSMEs.
Right. So you have a primary, presence in the south of India, looking to move to the north. But if you could take us through the revenues you've made so far, and what are the targets that you've set for 2025?
Sure. So by the virtue of business, right, we are a revenue generating, but we are at early revenue generating company. Right now, I think I will talk about 2025 and 26. Our primary target is to increase the dispersal rate. So today we are doing around 70 lakhs to 80 lakhs per day of loan dispersals. We want to take this number to around 20 CR per day because the credit gap in the industry which we cater to is more than 40,000 CR. And even if we serve to a sizable portion of it, it's a huge industry which we have to cater. So that's the key target. And our net interest margins are anywhere from 7% to 11%, depends on anchor to anchor. So that's how we want to grow our business.
All right, Subhash, thank you so much for joining us on the show. We're completely out of time, but we wish you all the best on this journey going forward.
Thank you so much. Thank you so much.
All right, moving on. It's been a tragic few weeks for the startup community. The startup world has lost an entrepreneur today. Tablespace founder and CEO Amit Banerjis passed away at 44. The news comes at a time when the company was planning to hit the IPO market in 2025. Banerjis founded workspace provider company Tablespace in 2017. Before venturing into the startup, he was associated with Accenture for over 13 years. His sudden death just comes weeks after Rohan Mirchandani, co-founder of yogurt brand Epigamia, died of heart attack.